The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the March 6th. Fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who absolutely knows with certainty that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Thursday. I know I did. Let's make sure that you and I, that we do everything we can to have a fantastic and fabulous weekend. Of course, the easiest way to do that is to always remember that life happens for us, not to us. When you and I, when we make that one little 2x4 exchange, folks, it means that you and I can find the gift in every set of circumstance. And that's what the role of the universe is. It's to throw circumstance at us. That's why we trade these markets, because we get those circumstances each and every day. I'm absolutely grateful for your presence here today. Of course, I'm here to serve you. That means you can pick up the phone. You can dial in at 877-927-6648. Internationally, you can reach out to me at 727-445-1044. This is fantastic and fabulous Friday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow futures trading off about 90 points. They're trading out at 18,025. S&P down 9 points, trading at 2,090. Nasdaq futures off 4.5 at 44.45. The king of beers, the king of dollares, on the move up 936 ticks, trading out right around the 97.33 level. That means we've got the euro cratering and falling. Of course, we got that message 2 days ago when the euro broke through that little support level, so there's no surprise there. Gold's off $15. That's no surprise. We've been talking about how the commercial traders have been taking large net short positions inside gold as a percentage of open interest. We've been looking at that descending price channel, and of course we had yesterday's full moon initiation move, initiating things to the downside. No surprises there. Silver off 28 cents, trading down at 15.87. Light sweet crude is back, where is it? Light sweet crude is off 60 cents, trading at $50.16. A bit of a party. Maybe it's a pity party. It's over in the DAX in Germany. That continues to trade higher this morning, up about 0.5%. It's up 51 points, trading at 11,555. The FTSE back 29 points. We'll take a look at the FTSE over in Asia last night. A little bit of a mixed bag. The Nikkei up 220 points. That's a little over 1%. Hang Seng off 29. The Shanghai down 7. Again, our call number 877-927-6648. Now, what you guys probably want to first do, see, where do we want to start? Well, I'm just going to go take a look at the FTSE first. There's so much to look at, but we'll get it all done here within the next hour. That's a weekly chart that we're looking at. Hey, weekly chart's as good as anything. The weekly chart shows that nice 800-point, 13-month consolidation that the FTSE has been in. We broke out of it. It broke out here on February 16th. Came back and tested it this week. Hey, look, unless it closes today, unless it really gives up the ghost, which is always possible, and closes back below 68, 75, 62, all that the FTSE has done is tested its breakout area, and that is more bullish than it is bearish out there. That's the weekly chart as we take a look at the FTSE. Might as well look at the weekly chart for the DAX out here. If we take a look at it, of course, this had a 1,600 or has a 1,675-point consolidation that it broke out of. That says the target on that is 11,708. If we take a look at from weekly chart, boy, this looks nice and strong out here. It's A to B equals CD structure. Let's take a look at that on the weekly basis. The 1 to 1.618 becomes its next target area. That's 12,031 on the weekly charts out here. So the price target for the DAX ought to be somewhere between 11,708 to 12,031 out there. Long and strong. Now let's go back and let's take a look at the year. We're going to look at the futures. That way we don't have to worry about any kind of data feed. delay out here. And as we take a look at it, where is it? Right here, 6C. So we take a look at the futures contract. Again, this is a weekly chart. Now, what's going to be interesting as we take a look at this is, remember yesterday, I drew in here a bit of a descending price channel. We'll see if this area, now it's a little bit of ways away from it, so it still has further to go. That's down in the 107 area. But when we take a look at A to B equals CD patterns as well, let's look at that. Again, this is the weekly chart we have up on our screen out here. We'll start with an A point out here back in 2008. That'll be our A point. Our B points down here in 2008, October 2008 as well. And the C point, yeah, right up here. So 1-to-1 A to B equals CD. It's already down below that level. Can also give us a price projection here in the 105-ish area. You have to say that that is where it is headed to. Of course, we know longer term, it's got that 99-cent level written all over it because that's your 0.786 retracement off of the lows to the highs out there. We've taken a look at that a number of different times out there. If we look at the Euro Japanese yen, I've got a little bit of a delay here, 15-minute delay. Right now, what it has done, it's down around the 0.786 retracement level. Now, in the case of the euro yen, it's trading inside that January. This is a daily chart we're looking at, the January 26th swing point. It's inside that swing point. It's at a 0.786 area, 131.55. Any close below 131.55. That sets up a move down to test the bottom of that swing point at 130.15 out here. We want to keep it's not oversold at this stage, so it can easily run down to those levels. Why do we pay attention to that? Because that's the indice, that's the currency pair that tracks the U.S. stock market better than anything else that is out there. So if that heads lower, you got everything kind of moving lower here. We'll see whether or not the markets are going to try to bounce. We'll take a look at some intraday charts to try to figure that out. Let's take a look at what's going on inside of Goldilocks at the moment. What do we know about gold? What we know about gold more than anything else is at a high percentage of the time. What high percentage am I talking about? 80+% of the time. Full moons have some type. You can call it the jobs numbers out there. You call it whatever it is you want. I'll call it the full moon because the full moon doesn't happen every Friday out there. And the full moon creates some kind of initiation move in gold. It's one of the best indicators out there with regard to what gold is going to do. What happened with gold yesterday? You know, bounced up by about, what, $5 or $6 and gave that up, started moving lower. Initiation move to the downside. Where is the downside target? Well, you've got a descending price channel. That's the bottom line. That certainly says that the 1168 is in play, but you'd have to say that even lower price comes into play out here. We'll have a pretty decent feel. Now, what gold is doing as we speak, it's testing the swing point low from November the 7th. It's actually testing the high of the low. And the high of the low out there is 1179. So far, intra-session, we've seen a low of 1190. What is a high? Make sure I got this right here. 1179. So far, we've seen a price projection, or so far we've seen a low of 1197. It's just I was dyslexic there, which is dyslexia is a good thing, by the way. I won't go into that as the reasons why, but it is always good. I'll tell you why. It's always good to be able to see things differently. You've got to, and that's why, how about that when I put up the picture, this picture right here. I mean, if you're going to trade the markets, what you've got to be able to do is you've got to be able to train your eyes to be able to take a look at this image. Well, it's this image right here, actually. You've got to be able to train your eyes to be able to look at this image and see things differently. You've got to be able to see both the pretty girl and what's referred to as the ugly girl, the ugly woman out here. You've got to be able to see both images because they are always right in front of you. When you trade these markets, you've got to look at the bullish case and the bearish case out there. I don't care how you slice it, folks. I guarantee you, no matter how thin it is, there are always two sides of that piece of bread. So you've got to be able to look at both sides of the trade out here. If we see gold close inside the 1179 area, 1179, you're trading at 1180 right now. If you see it close inside 1179, now you're inside that swing point. And that says, okay, you can come down to that 1168 area. That's your 0.786. You could even get down a bit further out there. So that is what's going on inside gold. I have a little bit, now the problem is, that the CFTC data comes out today, 3:30. Well, it's scheduled to be released at 3:30. I don't know if any weather problems are going to delay that. They shouldn't delay it, but it should be out today at 3:30. But it's really only data as of last Tuesday, so we'll have no idea. Or this past Tuesday, I should say, we'll have no idea whether or not there are any changes in the commercials position. But it was so high from net short position standpoint. I see a change, but I don't see anything that would be considered a massive change out there. So that's what's going on inside of gold. If we go take a look at silver out here, off 33 cents as we speak. Silver also trading in a similar pattern, in that similar descending price channel out here. And we know that silver is already inside that December 1st swing point, and that says that price could move down and test the lows, $14.70. If we just simply take a look at retracements from the low to the high out here, to the highs, recent highs, that looks like back maybe on January 21st. It says 1552 is the next stop on the way down. That's going to be your 0.786 retracement. We've got a nice little or close to a intersection there, the intersection of the descending price channel. If price breaks through that, does that mean anything? That just means that the bottom of the price channel was not situated, was not positioned properly. That's all that it means. You can't break out to the downside when you're already moving to the downside out there. So, but you do have an intersection in that 1552 level out there. How will we know if a bottom has been made? No different than how we know if a top has been made. You will see some type of reversal signal out there, and it is so important to understand your Japanese candlesticks, because there is one way that the market communicates to you and I each and every day. Now, some days it decides to take the day off, and the candle doesn't mean anything. But when you're moving up, it means something, and when you're moving down, it has some meaning as well, and you want to make sure that you know which ones are which and which ones you got to pay attention to. I'd love to teach you how to do that. I know I can teach you how to do that. You want me on that wall. Happened to see I saw that scene last night. Was that A Few Good Men out there? I love that scene. And the easiest way to do that is, look, if time is important to you, and you really do want to be able to learn the message of the markets out here, then let me teach you how to do that. I'm here to serve you. Let me teach you how to do that. Come on over to send me an email, steve@tfnn.com. We'll get you signed up for one of my workshops. The cost of admission is insignificant compared to what it is. You can go try to do this stuff on your own. In fact, you can do this on your own. I can tell you approximately how many hours it'll take you, and then you have to do the math to determine whether or not that's really what it is that you want to do in order to get to point A to point Z in a quick period of time. So we get back from this break. Let's go take a look at the futures markets. We'll look at the daily. We'll take a look at some intraday, try to get a feel for what the markets may want to do, any kind of bounces, maybe some longer term projections out here. If today's a bad day in the markets, if today's a bad day, I've been calling for maybe a slight decline and then a pop-up, I may be changing that outlook. The markets may be going down into the April time period out there. This is Steve Rhodes. This is TFNN. We'll be right back, folks. Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off one. Dow futures off 114, and you've got Apple is going to be moving into the Dow, taking the place of AT&T. Now, if there ever was a telegraph call, remember when Apple went through the stock split, that 7-to-1 stock split out there? You know, if we could go back and get that show. I said the very next day, or when that happened, I said that what the likely outcome, the reason that Apple, why they do a 7-for-1 stock split out there, and the reason I thought was pretty evident. It was that what Apple was doing was they were doing that stock split with the intention of being able to get into the Dow. They were not going to get into the Dow with a $700 stock out there, but $100 stock, yes. Now Apple's trading up this morning. You've got a lot of rebalancing that just simply with regard to portfolios, percentages, things along those lines out here. So, you know, you've got Apple, which is heavily weighted inside the NQ. Right now, let me see. What is Apple? Closed at 126. It was trading around 128. Yeah, so trading around 128.40 as we speak right now. So you're going to see a nice little pop. And that's important because the weighting inside of the NASDAQ out here, you know, the damage, at least thus far, is relatively minimal. What do I mean by that? If we take a look at the NASDAQ daily chart out here, so here's the daily time frame. Really shows you all different kinds of things out here, all different kinds of elements. Tells us as an example from a Chapman wave standpoint, we're only in the third leg up, leg C on the way up. But what it was doing, what the NQ was doing on its daily chart, it also made it as price got up in that 5,000-ish level in the composite. We're looking at the futures contract right now. It was doing so inside the futures contract with less relative strength out there, and then gave us a little bearish reversal signal. Now what it's done, and so it's made that, so we've got competing patterns out here. You can see from a price standpoint, it hasn't really fallen apart. It really hasn't. You know, I mean, you're talking inside the NQ, the high back on Monday, it got up to what, 44.79. You're at 44.41 right now. So what do you look? You're about 40 points, not even 40 points out there, 38, 39 points. That's not a big deal. Price has not come down and tested the TAS market profile high, the resistance zone out there, 4,400. So that's another 40 points to the downside. If price accelerates to the downside today, and that's a real possibility. If price accelerates to the downside today, look for that 4,400 level inside the NQ with regard to being able to give us some kind of information as to what it wants to do. Its real support level is down around the 43.64. But the NQ, and I think it's going to be all about the NASDAQ out here. It's going to be all about the NASDAQ because it's got the strength. It's got the ability to go ahead and pull the markets higher out there. Will it do that? I don't know. The other ones are a bit weaker. You know, if you take a look at the daily chart here, for the S&P futures contract. The S&P futures contract right now below that 2,098 level. That's a key level out there. It's also in the process of just about to test its market profile low. Let me switch over to a different tool here. Let's take a look at that. That's going to be a level on the daily chart for the ES Mini. What we know about the ES Mini is it made the 1.272 expansion of its set of swing points out there, and that's where we saw its high. Now, its market profile low support is at the bottom of that box is 208.450. So 208.450 or 208.650 as we speak right now. If we see a close below 208.450, although be it a lagging indicator, it's going to see that you've got a change in trend that is underway. Otherwise, this could be a level as far as where price begins to hold inside the market. So if prices hold today, right, we've got the NQ out here, has not really given up the ghost, hasn't even gotten down to an old resistance, which is new support out here, has not gotten down there. And the last time that we saw the ES down in this level, that was just 2 trading sessions ago. It got down to 208.525, and 208.450 is the market profile low. So this is the level that needs to be cracked in order for the bears, and I don't mean cracked, I mean closed below, for the bears to be able to start giving it any kind of high-fiving. If there is any kind of high-fiving, we've got to go take a look at where can price move to. Your targets on any close below that 208.450 level, 206.275, that becomes your next level. 202.876 would more likely be the target. And of course, at that stage of the game, everybody will be throwing in the towel. As I mentioned, as we went into that break, I now have reserved I now have 2 different methods of thinking because there's 2 analog patterns that are basically in play here. I don't know if the markets are going to work extra hard to get back on track because the bottom was supposed to have come in yesterday, the day before, even today out here, and that, I don't know, that could happen. That's always a possibility out here. Or we start seeing some of these other areas get cracked. Maybe the markets move lower into April. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 107, trading out at 18,028. S&P's down 9 at 2,091. Composites off 10 at 49.72. Russell's off 7.5 at 12.26. DAX up 38. FTSE down 30 points. Gold's off 19. Silver's off 30 cents. Light sweet crude down 57 cents. Leading the charge, the upside. Why? I don't know why, but it's leading the charge. The upside is up 9%, up $4.80. You got Calithera Biosciences. Calithera, maybe. CALA is a ticker symbol, up 27%. I don't know what they cured, or maybe there's a merger going on. Baidu, BIDU, up 1%, up $2.30. Foot Locker up 3.5%, up $2. You've got the Fresh Market up 4.5%. Apple's up $1.50. Big Lots up about 3% out here. Exact Sciences up 6%. To the downside, Rand Gold Resources, dollar-wise, leading the downside up $3.40. Lululemon down $3 and change. Goldman Sachs off a couple bucks. Tesla down $2.40. Ventus off 230. Vanguard Real Estate Investment Trust off a couple of bucks. Costco Wholesale down $1.70 out there. Another healthcare REIT, HCN, down about 3%. Okay, let's go take a look at. So we've taken a look at the markets. We've taken a look at the currencies. We've looked at the commodities. We didn't look at light sweet crude. Let's go take a look at light sweet crude. Not really doing a whole lot out here, off 60 cents. You know, in order for light sweet crude to really get moving, well, here this is not too bad. So if we take a look at light sweet crude, what it is doing, well, you know, I was going to say it's trading at the bottom of the box of its TAS market profile, but the reality is, when we take a look at this box here, it hasn't really been a good indicator as to you know, support and or resistance for the most part. So I think all we can say is that in the case of light sweet crude, he just continues to trade around this level out here, you know, not giving us any really good indication other than just consolidating at this area, and the consolidation between $47 to about $55 per barrel out there as we take a look at West Texas Intermediate. Yeah, let's take a look at some, let's see, how about natural gas? Let's take a look at natural gas, back a couple of pennies out here on the daily chart. Right now, looks like just an inside day. Net gas, if it continues to move higher, ought to find resistance around that 293 level. If it continues to move lower, look for support in the 271, I should say, 271 down to the about the 264. Again, nothing more here than just a lot of solid sideways consolidation chop going on. Let's take a look at some of these things here that are moving and grooving. You've got Cooper Companies, COO, up 7.5%, up 12 bucks. What do we got with Cooper Companies? It looks like their profit topped their estimates. Profit, net income, where is it? I don't see it. Net sales up 445 million versus 400, so up 10%. Let's go take a look and see what the Coop is doing out here this morning. Gapping up, volume behind the move so far, 143,000 shares. Looks like all-time highs out here. Taking out the B point of A to B equals CD to the upside out here. Looks like could be several if you wanted to, but the B point, the shorter one, was November 19th. 700,000 shares out there. Should have no problem taking that on. That smaller A to B equals CD pattern out here for Cooper. I don't know if it's Cooper Tires or just Cooper Companies. And if we take a look at 1-to-1, says 182.13. I would say more likely 189.72 in the cards for ticker symbol COO, Chief Operating Officer out there. YY Inc. up 7.5%, up $4. Looks like their net income was up about 94% out here. Now this thing has been demolished. It still has work to do in order to really break its downtrend. If we take a look at that downtrend out here, come on, give me that arrow, would you? Give me that arrow. Oh, there it is. Gave me the arrow. Let's take a look at the downtrend inside of YY as soon as Stevie can grab it. There we go. Here is your downtrend inside of YY. This is the level right around the 64-ish area that it really needs to be able to break through. Now, this thing here also just traveling into its most recent supply line. There were 5 million shares to the downside. That was back on February 25th, so not that long ago. But that top of 61 bucks, even Steven acting as a bit of resistance as we speak right now. Let's take a look at moving to the downside out here. Let's go take a look at Wuxi Pharmaceuticals, Wuxi Pharmaceuticals. They're out with numbers. Net income of 33 versus 32 million on revenues of 190 versus 157. Maybe a little bit too much T&E out there. I don't know what their expenses were, but they certainly were more than the revenues that were brought in. If we take a look at it, gapping down this morning, volume so far 168,000 shares. Its most recent swing, what's got is a high volume low that has not been tested back from May 15th, 2014. The top of that candle is 33.73. Volume there again, 2.3 million shares. The bottom of that candle session, 29.84. Any close today inside of 33.73, and that low likely gets Yeah, maybe gets texted too, but it is more likely to get tested. That is WX, the ticker symbol. Lululemon out here. Looks like it's making a little bit of lemonade today, down 6% off $4 as we speak. I don't see any news behind it. Lululemon, after making a 1 to 2 A to B equals CD to the upside out here. Now we see some, looks like some decent volume off of the highs. Let's get rid of the A to B equals CD pattern. Where is it that Lululemon is headed to? Well, its most recent sign of strength is where it's headed to right now. That sign of strength took place on the trading session of January 12th and January 9th. The volume there on that breakout session was 10 million shares. You've done almost 1 million shares in the first 10 minutes of trading. If 59.22 does not hold that support, then the next level for Lululemon to head to is probably 49.65 to 48.72. Ticker symbol there, LULU. Let's take a look at Simon Property Group. SPG is the ticker symbol, down $4, up $2.36 out here. Gapping down this morning. What is this trading into as we take a look at Simon Property Group? Simon Property Group, we can see here, broke a hammer candle that was formed on February 2nd. We saw a close below that, a test that area back here on February 17th. Let's just take a look at some retracement levels of this. Let's go from the low out here, recent low back in September 2014. Whoops, that didn't work. Let's take a look at that low, September 2014, to the high out here on January the 29th. We'll see that the next area, targeted area, becomes 179.19. That's your 0.618 retracement area. 171.82 is not out of the question for ticker symbol SPG, Simon Property Group out there. Dow's off 86. S&P is down 7. Composites off 6. Russell down about 4 points. Let's go take a look at the summation index for these puppies. We've got the Nasdaq Composite. It is in the down below the zero line. Got just slightly above it yesterday out there. We'll see where this thing ends up today. If it stays below the zero line, we'll say that yesterday was nothing more than just a bit of a counter trend move up there. It really just depends on how the day finishes. We aren't seeing much in the way of any kind of selling signals inside the composite, other than, I believe, utilizing this indicator. And we saw that first signal a couple of days ago, so we saw a little chink in the armor out there inside of the Nasdaq Composite. Inside of the Dow, inside of the New York Stock Exchange, they just simply continue to extend their losses. Of course, price-wise, damage-wise, not too shabby out here. I mean, really, just take a look at it. Let's go take a look at it. I'm glad you asked me to take a look at it. Let's go from the low to the high. We're not even anywhere near the 0.382 retracement level at 17,810. You are at 18,046 out here. This indicator starts to get into an oversold-ish level, about another 1.5 or so to the downside out here. That doesn't mean that that's where the bottom comes in. Just means that, you can start to see some, sideways move, maybe small bounce, something along those lines out there. If I look at the New York Stock Exchange, probably the most important thing for us to be watching today. Why? Well, Stevie's expression, and that is when you see a close below a hammer, if you are long, you are wrong. Well, if we take a look at the New York Stock Exchange, it was the one that was giving us the early signals that the market was forming a intermediate or short-term top out here. It was doing that just simply by taking a look at that price oscillator. It dipped into the sell zone back here on March the 2nd. Of course, we saw a little doji candle up at the high at resistance. We saw some follow-through. We saw those leaves falling off the tree. That was on the 26th of February. And then, of course, we see the price oscillator having moved below the zero line out here. That was back on March the 3rd. Well, what took place a couple of days ago, 2 days ago to be specific, because there was enough of a retracement, enough of a directional move to the downside, was on the date of March 4th. We saw a hammer candle form inside the New York Stock Exchange. That hammer candle low is 10,941.14. We have seen a low thus far today of 10,938. Your trade at 10,954. A hammer candle is being tested. If this level holds as support, it's it says there are some bulls that are lurking out there, and that it will not have broken through a key support level. If, on the other hand, we see that hammer candle get broken, it promises lower price. It promises lower price. I start moving depending on whatever kind of damage could be done. And I can't guarantee the damage that will be done today. I'm just saying we know what to look for, and then we can go ahead and make our decisions out here. So any close below, again, I'll give you that number out here, 10,941.14 inside the New York Stock Exchange. It is an indicator of some real storms ahead. Now, the next retracement level isn't that much further down inside the NYSE, 10,895, but I don't think that's enough to actually go ahead and hold it up. I think you're more likely looking at the New York Stock Exchange moving down to the 10,742-ish type level. So that's what's going on inside of it. So it's going to be all about the NASDAQ composite, all about the NASDAQ composite. Well, I guess we've got to give some credit to the New York Stock Exchange. Those will be the two things that we take a look at. If we look at the Vix Index right now, if we look at the Vix, let me try to look at the Vix. Let me get over to the Vix. You've got the Vix Index that is trading up 28 cents, only 2% as we speak this morning out here. So with regard to whatever damage is being done in the market, as long as the Vix doesn't make more than a one-day rate of change of greater than 10%, the market finishes lower today. That offers a lower price out there. As we mentioned, and just simply going back and looking at that daily time frame for the S&P futures out here, that the key level which has not been pierced, that key level of support is the 10. What is it? 10? What do you mean 10? What are you talking about? 10? 2106. 50. I'm sorry, 2084.50. 2084.50 is the number. Thus far, it has held as support out there. So those are the real key critical areas for us to go ahead and be paying attention to. Let's go check out. There's a request said just if I could review the euro once again. So I will do that. We'll take a look, even though this one here, we'll look at this chart. This is a 15-minute delay on the euro. This is a daily chart. That's a euro Japanese yen. That wasn't what I wanted. I wanted the actual euro currency pair itself, trading out at 108-ish out here. What we know about the euro is this. Once it broke through that candle, which was not a bullish, we gave it the benefit of the doubt. We called it a morning star reversal pattern out here. Once we saw a price close below the January 26th low, which was 1.109, and it did that 3 days ago, we said, look out below. Look out below, because that says, hey, price might want to get down to 99.9905. That's your 0.786 retracement level out that. In fact, until we see any kind of bullish reversal signal, that has to be the assumption out there. And we would be willing to change that assumption just simply when we see a reversal signal, because in the case of euro, it is in the extreme oversold condition out there. So that covers the euro. Let's go take a look at the ETF structure, see what we have out here. You've got the QQQ ETF down with 16 cents. No big deal, so to speak. In the case of the QQQs, the numbers that you want to be paying attention to out here, probably the market profile high and low, although it's a relatively thin box. The high is 108.58. That's your top of the box. That's resistance. The bottom is 107.76. That's what you're looking for to either hold the support if you're long or crack as support if you are short. You want to be able to see that level crack. What do we know about the Qs yesterday? What kind of volume there? A light volume. What kind of light volume? 15 million shares, second lightest trading day of the year inside the QQQ. Sounds to me like everybody is at the party and nobody is left to come. If we take a look at what's going on inside the Russell 2000, 2.5 million shares to the downside, down 22 cents. No big deal. What is it also doing? Trading with inside its TAS market profile box. Hasn't even tested the bottom. What's the bottom there? 120, what is it? 121.39. That's a number that needs to be cracked for the bears. The bulls want to see the top of that box cracked, 123.11. Those are your numbers for it. If we take a look at the SPYs here, 15 million shares to the downside, 17 million shares thus far. Just like we looked at the ES Mini, let's take a look at the bottom of the box. The support level here is at 209.08. To close below that says look out below. This is Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's off 87, S&P down 9, Composite off 11, Russell's off 5 points as we speak. Right now, gold's off 19, silver's down 30 cents. Have a request here to go take a look at the Mobile INV from Larry in Detroit, the Motor City out there. Hey, the Red Wings, what a great game. Not last night, but the night before. Who were they playing? They were playing, who was the Red Wings? There was a, gosh, who were they playing? Man, why? Oh, the Rangers. They were playing the Rangers. What a great game that was out there. Friday night, they may be playing, maybe, I don't know if it's hockey night in Detroit tonight or not. In any event, Mobileye. Larry's looking to build a position in Mobileye. Here's what I would say to you at this stage. It's trading out towards its lows. Now, this was an IPO just simply going back to August in 2014. It's trading out in that range. One of the things I notice here, if we take a look at the TAS market profiles, if you notice since its highs that were made out here back in October 2014, just shortly after that, notice how price has rarely been able to break above the resistance, the top of the box out here. It did it for about 3 days. That was back in December 5th, the 8th, and the 9th out there. And then it has failed to be able to break above the top of that. Right now, it's trading in there. So the question is, if this closes above the top of the box here today, 37.89, is there a breakout that's taking place? Because the way that this is formed right here, this box says that sellers should have control. If it is, Larry, then maybe there's a chance that it's beginning to break. I remember the last time out there when we saw a break above that level, it only held for a couple of days. If the market is going to go ahead and make a retracement, if the composite price oscillator stays below zero, even though what doesn't look like a whole lot of price damage, there are some problems in River City. There's some problems under the cover here. At this stage, I am got two sides to this slice of bread here. The market continues to stay lower throughout the day, and that is that maybe it's not as much of a shallow retracement as I was originally believing, and this could go on through April out there. And so what will that do to stocks like this? In any event, if Mobileye does pull back, look to buy it down at that swing point from March the 3rd, right around the 32 to 33 level. Folks, have a fantastic, fabulous weekend. Thanks so much for being here. Stay tuned. The Bull Bear Binary Option Hour is up next. Have a great weekend. Talk to you on Monday.